Good day, ladies and gentlemen, and welcome to the Sands First Quarter 2025 earnings call. At this time, all participants have been placed on a listen-only mode. We will open the floor for your questions and comments following the presentation. It is now my pleasure to turn the floor over to Mr. Daniel Briggs, Senior Vice President of Investor Relations at Sands. Sir, the floor is yours.
Thank you, Paul. Joining the call today are Rob Goldstein, our Chairman and CEO, Patrick Dumont, our President and Chief Operating Officer, Dr. Wilfred Wong, Executive Vice Chairman of Sands China, and Grant Chum, CEO and President of Sands China and EVP of Asia Operations. Today's conference call will contain forward-looking statements. We will be making those statements under the safe harbor provision of federal securities laws. The language on forward-looking statements included in our press release and 8-K filings also applies to our comments made on the call today. The company's actual results may differ materially from the results reflected in those forward-looking statements. In addition, we will discuss non-GAAP measures. Reconciliations to the most comparable GAAP financial measure are included in our press release. We have posted an earnings presentation on our website. We will refer to that presentation during the call. Finally, for the Q&A session, we ask those with interest to please pose one question and one follow-up question so we might allow everyone with interest the opportunity to participate. This presentation is being recorded. I'll now turn the call over to Rob.
Okay, thank you, Dan. Let's begin with Macau. This is a competitive market that has not grown as we anticipated. However, we have the strongest assets in the market, and we can perform better despite the challenging macro environment. The Londoner is now fully open this time, 2,405 study rooms and suites as we prepare for Golden Week in May. Now that we've completed the development projects, we expect this asset to elevate our performance. Our focus is on improving our revenue and cash flow across the portfolio. There is opportunity in every segment to show stronger results. Our business strategy remains unchanged. We have designed our capital investment programs to ensure we will lead in both Macau and Singapore. We delivered $535 million of EBITDA for the quarter in Macau. SEL still continues to lead the market in gaming and non-gaming revenue and EBITDA. We have meaningful opportunities to grow in every segment. Our objective is to grow our share of EBITDA in the Macau market. We have a unique product advantage in terms of scale, quality, and diversity of product offerings. Turning to Marina Bay Sands in Singapore, we delivered a record quarter with $605 million of adjusted property EBITDA, an extraordinary achievement by any standard. I assume this is a record EBITDA quarter for any gaming property in the world. Pretty extraordinary performance. Mass gaming and slot win reached $778 million, reflecting 73% growth from the first quarter of 2019 and 13% growth from one quarter a year ago. The results at LVS reflect the positive impact of our gaming investment program and the growth of high-value tourism. The growing appeal of Singapore as a destination is enhanced by the robust entertainment and lifestyle calendar. We believe there is considerable runway for growth there as well. Again, thanks for joining the call. Let me turn the call over to Patrick before we go to Q&A. Patrick.
Thanks, Rob. Macau EBITDA was $535 million. If we had held as expected in our rolling program, our EBITDA would have been higher by $10 million. When adjusted for lower than expected hold in the rolling segment, our EBITDA margin for the Macau portfolio of properties would have been 31.6%, down 280 basis points compared to the first quarter of 2024. All 2,405 rooms and suites at the Londoner Grand are now available for the upcoming May Golden Week. Now that the refurbishment process is completed, we are focused on delivering revenue and cash flow growth at the Londoner. Margin at the Venetian was 35.3%, while margin at the Plaza and Four Seasons was 35.6%. We expect margin improvement as revenue grows, and we use our scale and product advantages to better address every market segment. As the Londoner ramps up and is integrated into our Cotai offerings, our competitive position will be stronger than ever. We look forward to utilizing our entire portfolio to grow revenue and EBITDA. Now turning to Singapore. MBS's EBITDA was $605 million at a margin of 52%. Given the mix of games and demonstrated player preferences over the last 2 years, we have updated our expectation for hold on rolling play at Marina Bay Sands to 3.7%. There will naturally be fluctuations in any specific quarter given by game mix and player preference. We will continue to provide the illustrative impact of hold on our rolling play in Singapore. The record financial results at Marina Bay Sands reflect the impact of high-quality investment in market-leading product and growth in high-value tourism. We believe we are still in the early stages of realizing the benefits of our investments in Marina Bay Sands. Turning to our program to return capital to shareholders, we repurchased $450 million of LVS stock during the quarter. We also paid our recurring quarterly dividend of 25 cents per share. Before going on to Q&A, I would like to provide an update on the New York development opportunity. We strongly believe in the development opportunity for land-based downstate casino license in New York. We also continue to believe that the Nassau Coliseum site is the best location for that development opportunity and should be highly competitive in the New York casino licensing process. However, as we have previously stated, the company remains concerned about the impact of potential legalization of iGaming on the overall market opportunity and project returns. We are in the process of attempting to secure an agreement with a third party to whom we can transact the opportunity to bid for a casino license on the Nassau Coliseum site. This would include those that may be able to address both land-based and digital markets in New York. For Las Vegas Sands, we believe the highest and best use of our capital in the near term is to purchase LVS and SCL shares. Accordingly, LVS has decided not to bid for a casino license in New York. We believe repurchases of LVS equity through our share repurchase program will be meaningfully accretive to the company and its shareholders over the long term. Our board has increased our share repurchase authorization to $2 billion. We look forward to continuing to utilize the company's share repurchase program to increase returns to shareholders in the future. Thanks again for joining the call today. Now let's take questions.
Thank you, ladies and gentlemen. The floor is now open for questions. If you would like to enter the queue to ask a question, please press star one on your telephone keypad now. If listening on speakerphone today, please pick up your handset to provide optimum sound quality. Also, we ask each participant to limit yourself to one question and one follow-up. Please hold a moment while we poll for questions. And the first question today is coming from Carlo Santarelli from Deutsche Bank. Carlo, your line is live.
Yeah, hey, thanks, everybody. Rob, Patrick, thanks for your comments. As anyone could kind of see when you look at, the valuation of the Hong Kong listing and what it implies basically for the corporate and Singapore, one understands kind of the willingness and desire to kind of repurchase shares. As you do think about the two entities, though, and the various repurchases across both and your stake in the Hong Kong listing specifically, how are you guys kind of balancing the way you more or less go about those allocations right now?
So I appreciate the question. You've heard us say it on prior calls. We see meaningful value in both LVS and SCL equity, and we're going to continue to act with this belief. So we were active during the quarter at LVS. I think our goal is to really be active in both SCL and LVS equity and continue to march towards that 74.9, and you'll see us do that. I think on the LVS side, we think the valuation where our stock is currently is very attractive for us. We're going to be aggressive in the way that we buy back shares and that we have done previously. So we view it as an opportunity, and we're going to continue to be active in the share repurchase market for both SCL and LVS.
Great, thanks. And then if I could, just a quick follow-up. Obviously, the decision to raise the theoretical on the VIP side in Marina Bay Sands makes sense relative to the history here over the last 2 years. As you look at, however, on the mass side, hold was up nicely, and I know it's always tough to kind of guesstimate what handle would have been in a normalized hold environment and how to think about all of that. But when you look at kind of the impact the higher hold year over year on the mass side, mass table side specifically had on MBS, is there any way you guys could maybe outline how you think about the potential EBITDA benefit that stemmed from that?
I think the problem is, it doesn't matter high end or mass. The problem is it depends on what the customers bet. And that's always been the reason why there's such talk about smart tables. It enables you to actually know and not guess whether it's 3-4, 3-6, 4-1. It tells you specifically. And I think that's the advantage we're going to have in both Macau and Singapore in the future. And again, it depends on the composition of bets. It really doesn't matter, if it's premium mass or base mass. If the customer bets, I call them prop bets, but the lesser, the more favorable bets the house, it's going to drive the hold percentage. For years, people discussed this and guess the handle and hold percentage and false drop, et cetera. This takes the guesswork out of it. It makes it actually mathematically perfect. And that's our goal, is to have that information across both jurisdictions in the future.
I think the most important thing here is that while, MBS obviously is impacted by hold our rolling program, really the outperformer at Marina Bay Sands has been the mass segment. And I think that really has been the story at Marina Bay Sands. Yeah, I think our rolling business has improved in a meaningful way. But when you look at Marina Bay Sands and the investments that have been made there, it's really to attract high-value tourists on the mass side. And our premium mass and mass segment there has outperformed to an extraordinary level. And we think there's room to grow now that our renovation is completed. So I think it's an important story to talk about how we see the uptake of these side bets and how it has moved our hold over time. I think our team there has done great work developing game types and innovating so that we can benefit from player preferences and these more aggressive bets. But at the same time, it's really a mass-driven story based on the investment and the non-gaming amenities that are driving visitation and high-value tourism. That's why you see the EBITDA that we have today.
So Rob, Patrick, then is it fair if you look at last year, kind of the mass table hold was right around 20.1%. It had been kind of 18 and 19 in the prior years. Based on the theoretical that you guys are seeing with the information that you have to be able to do so, is 20 more like that normalized level on a go-forward basis on the mass side?
I don't know. You can't know. And again, the difference is it's like sports wagering. You read about the sports betting companies. When they have flat bets on if one team wins the other, the whole percentage is relatively weak. When they make side bets, it soars. And I think the same is happening here. The mass tends to bet more on the prop bets and gives you more advantage. And that's my point, is that if for 20, 30 years I've been doing this, people have been guessing what's the right hold for 3.6, it's 2.4. The beauty of this whole thing is we'll know mathematically perfect based on the bets they make. And we take the table drop out of it and the false drop and the handle. It comes down to it basically becomes a slot machine. You'll know exactly what the number should be. And I think what you are seeing, though, across the industry is the development of side bets has been very valuable. And since we're the biggest baccarat provider in the world, for this company, it's very valuable and it will impact EBITDA in the future, because the more bets they make in these side bets, the more you grow the whole percentage. Baccarat used to be a very dead game house at 2.6, 2.7, because the flat bets were predominant. Today, the fact it's grown to 3.7, could go to 4, is hugely valuable for your EBITDA. And again, it will be very clear within the next year the exact mathematical number. You won't be guessing more and say it's going to be this stuff. It's going to range, if I guess, 3.5 to 4%. But again, as these bets proliferate and people choose to make these side bets, I think baccarat becomes more and more valuable for this company because it's our principal source of revenue.
And we should just caution everyone that with player preference and game mix, these percentages will move around.
Yes.
And with bet size. So we just have to be aware that this is the best that we can do in terms of providing information. And we're going to continue to be optimistic about the types of games we put on the floor in terms of growth they can provide. And we'll see what they do.
But one thing that's undeniable is bet differences are happening every day. And developing these games is very valuable for the industry, very valuable for us. And it's happening and getting better by the day. And the more these bets continue to become more important, the more EBITDA will grow. And I think it's going to happen both in you're seeing it in Singapore. I think it'll happen in Macau as well.
Thank you both very much.
Thank you. The next question is coming from Stephen Grambling from Morgan Stanley. Stephen, your line is live.
Hey, thank you. I think you mentioned that there's an effort to activate the properties and see revenue and EBITDA ramp from here as the Londoner project has generally come to completion. It looks like there's some moving parts across the different properties. So I'm curious if there's any thought process on some of the ones that maybe have lagged in terms of how you will, reinvigorate growth there, whether it's Venetian or others, or is it just really a question of as the Londoner is kind of fully up and running, you'll see everything click?
Yeah, thank you, Stephen. I'll take that question. I think overall, yes, the focus will be ramping up the new product at Londoner Grand. As Rob mentioned, we now have the 2,400 rooms and suites in full service. And you'll see us leveraging the asset, the new product, to drive customer growth and obviously eventually revenues and EBITDA. But the ramp up will take its course over the next 12 months. We're still at the early stages of it. We just got the full complement of the rooms in mid-April. As for the other properties, our intention is to maintain and grow each of the existing properties while Londoner is ramped up. So you'll see us focus across Venetian, Parisian, Four Seasons, and Sands, across all of the product segments and price points. But yes, the driver of our customer growth will be the Londoner over the next 6 to 12 months.
And does the initial read in what you're seeing there, change the way you think about CapEx and allocating capital across the different properties, or is there any kind of renovations that you see in the future at some of the other properties?
I have to tell you, I think Macau is the greatest gaming market in the world. If you look at its size and you look at the potential and where its source markets are, the long-term potential there is absolutely incredible. And so we love our ability to invest there. We love the scale nature of our portfolio, the number of amenities that we have, and the quality of those amenities, and now the high quality of our entire property portfolio. We think we're in a great position, and we're going to continue to invest to maintain that position, but also for growth, because we think the opportunity is there long term.
I think we'll continue, Stephen, with regular upgrade and renovation of our existing assets. That's a given we have 33 million square feet of asset portfolio across Macau. But the major redevelopment and upgrading at the Londoner is largely complete. We'll have a few more amenities to add and restaurants. But from here on in, you should expect, yes, we will continue to reinvest back into the asset base because we need to upgrade and keep up with the competition. But it will be regular renovation where we'll be taking modest amount of keys out at any one time. And you'll see that, over every year, every quarter, over the next several years as we upgrade the existing portfolio.
Helpful. Thank you. I'll jump back in the queue.
Thank you. The next question is coming from Robin Farley from UBS. Robin, your line is live.
Thanks. I just wanted to circle back to the ramp-up you mentioned for the Londoner, and you did mention that it may take 12 months. So I wonder if you could talk a little bit about, do you think that your market share results in Q1, did the new Londoner rooms contribute to that, or would you say not really, like that's not really indicative of where you think your market share can go? And I guess, I don't know if you can give a little more color around, what would happen over the next 12 months or why it would take 12 months. I know you'll have, of course, very easy comparisons to the disruption in Q2 and Q3 last year, but, that maybe is a little bit longer of a ramp-up period than maybe people would have expected. Thanks.
I have to tell you, this is what we spend a lot of time talking about, and we're very focused on growing our business in Macau. Unfortunately, we had 2,000 keys 2,405 keys that we really wanted to be available. And it took a little while to get them. So during the quarter, we didn't have full access to all the inventory we normally would have to bring to bear. So I think, when you think about it, 1,700 keys that we were out, or 1,400, 1,600 keys we were out in average over the quarter is equivalent to not having a property available in your portfolio. And so I think now that it's back and we have the full strength of our portfolio, we're going to press very hard to continue to grow this business, recapture share, recapture EBITDA share, and grow revenue, which will expand our margin. But we have some work to do. I think that's very clear to us. We know it, we acknowledge it, and there's some things we want to focus on in Macau to improve our outlook and grow our business.
Yeah, Robin, I think that the reference to the 12 months is simply that in any new property of this scale, we are going to get better and better over time. That's really the point of that comment. In terms of the market share, yes, I think our results were impacted by the fact that we lost market share both against the prior year and sequentially. And we are looking, with the new assets coming online, we are looking to be competing harder for the revenues in a flat market. And we fully intend to compete with the Londoner, but also you can see some of our results in the other properties. We're looking to improve the performance at Venetian, as well as the other existing properties. So I think it's going to be a comprehensive effort to reactivate, engage new customer growth, as well as to fully leverage the new property in Londoner Grand.
Thank you. And maybe just as a follow-up, Macau has talked about kind of wanting to review the non-gaming investments and efforts of the concessionaires. Do you have a sense of what they would like to see more of, or what may have changed recently, or they would be looking for more of going forward? Thanks.
I'll give my view, and maybe Wilfred can also chime in here in terms of the policy direction. For us, we are continuing to focus on what we've committed to the government in terms of non-gaming investments. And clearly, we've already made a significant investment in upgrading the Venetian Arena at a cost of around $200 million. That was completed last year. That's our single biggest project that we've completed for the concession commitment. And of course, in terms of programming, in terms of developing sports and mega events with strong international IP, we'll bring the NBA preseason games this October, which will be a multi-year partnership. Wilfred, do you want to add to how things are evolving in terms of the direction on non-gaming investments?
Sure. I think the new administration now has had time to look at the overall picture of the non-gaming development, and they are, as long as we maintain our total commitment, they are looking to us to specialize in areas where we each do best, because they feel that maybe it's better that rather than six of us all working on similar areas, maybe there are emphases that each of us can focus on. So there will be opportunities for us to discuss with the government how we do best in some of the areas. And the second area is that we, because of the GGR reaching a certain level, we are also committed to spending an additional 20% of our into the non-gaming investment. And the government is really looking into how best to coordinate the use of these proceeds.
Great. Thank you.
Thank you. The next question will be from Shaun Kelley from Bank of America. Shaun, your line is live.
Hi, good afternoon, everyone. Thank you for taking my question. One big picture one and then sort of one micro one, if I could. On the big picture side, just, Rob or Grant, your high-level view here on just has the market dynamic in Macau, changed at all as it relates to the balance between premium mass and the competition there versus base mass? I mean, as I think about it, LVS has always succeeded, I think, really well when the market's been extremely full. But we've seen the visitation recover now, and sort of both segments are struggling a little bit. And so I'm just kind of curious on the balance and sort of, are you, pivoting strategy at all to kind of lean into, particularly the premium segment, if that's the healthier one right now?
Sure, I think your observations are correct. It's we used to, our scale and size played to our advantage for years, and it was a huge advantage for us, and that's more difficult today to right. And it's more competitive in each segment. There's no longer a free segment or easy business in Macau. I think it's very competitive. But in the end, I think our assets give us I think that we really handicapped this Londoner thing's taken so long and so difficult. Now we have all these rooms back open again. We can service the base mass, the premium mass. We've done well at the premium mass. We haven't done as well at the base mass, nor has the market provided opportunity to base mass. But your observations are spot on. We were the leaders and the margin leaders as well in that base mass segment, which is much more difficult today. And that's been the conundrum of Macau for us. I think now, though, it's a new day. London is open. It's extraordinary, both in terms of scale and quality. I think it introduces all kinds of new opportunities for us to maximize that asset and grow again and get back in the game. We're disappointed by our results in every segment. We can do better. We plan to do better. But I think your observations, unfortunately, make that market, it's highly competitive. It's base mass, premium mass. But there's no easy segment anymore in Macau. Grant?
Yeah, Shaun, I think to add to the visitation question, although you do see strong visitation growth and recovery, you can see also from slide 20 of Dan's deck, the visitation, especially this quarter, has been driven by the day trippers from Guangdong province because they've introduced a couple of new multiple entry visas to Zhuhai and Hengqin. and the Guangdong, non-Guangdong visitation is still only a recovery rate of about 75%. So clearly, the overnight visitation, the customers who are going to spend more coming from further away, that's still lagging. But to Rob's point, the base mass is the opportunity there has been more challenging for us, and therefore we are also competing for the revenues in premium mass, given a very competitive context in that segment. But that is the strongest segment. You're absolutely right in that observation. But we will continue to drive both premium mass and base mass, especially with the full inventory online now.
Great, thanks. And just as my follow-up, this sort of alludes to, I think, a comment that Patrick made in the prepared remarks about sort of expecting margin improvement as revenue grows. Just, I think as we did our math, and this is high level, so could be off a little bit, but Macau OpEx, we had up roughly 7% across the properties, this quarter. And be kind of curious, is that like the right run rate, or are there things you can do to match cost to revenue? Again, maybe this was somewhat, inflated by reopening of Londoner, maybe the reopening of the arena at the Venetian. I'm not sure exactly, but felt like it was a little that being up relative to kind of where revenues came in was a bit of a kind of a double issue for you.
Again, your observation is right. The main contributor is just the additional payroll costs that we incurred, both because of salary increases, but also additional headcount as we opened up these new assets. But at the same time, obviously, we had a revenue decline in a non-rolling segment. We actually did well in the slot and also rolling, but the most important segment of revenue is the non-rolling tables, and we came down in that segment. So that's where you get that negative operating leverage. So hopefully, we should be seeing the reverse of that over time as we compete with the new assets and the existing properties for the customers and the revenues. And as revenues improve, we should see the positive operating leverage even with the payroll cost increase.
Thank you so much.
Thank you. The next question will be from Brandt Montour from Barclays. Brandt, your line is live.
Great. Thanks, everybody. Thanks for taking my question. So curious, and I know you guys don't give a guidance or a comprehensive forward look at the business, but there's been some commentary from the government, from other sources that there's a pretty decent momentum into Golden Week in May. I'm just curious if April and/or the Golden Week bookings that you see feel better than normal, or worse than normal, or how would you kind of characterize what you're seeing out there?
Appreciate the question, but we don't talk about current quarter, so why don't we move on to your next question?
Okay, fair enough. Sure. So next question would be on the Venetian. I'm curious. I understand we kind of talked about the Londoner a lot here, and we kind of can see what's going on a little bit with the sequential share losses there because you didn't have the rooms, and so it's a tough environment for base mass. But what about the Venetian? Is there something? Can you kind of walk us through maybe the monthly results in that property, or how things evolved throughout the quarter, and if that was sort of affected at all by other things in the portfolio and optimization changes that you had made?
I think it's straightforward, Brent. I mean, Venetian, we just had too sharp a decline in the non-rolling revenues, especially in the premium mass segment, and we're addressing that. Obviously, the whole percentage against both prior year and quarter on quarter was actually much lower as well. But nonetheless, we're focused on driving the customer and revenues across all segments at Venetian, premium mass and base mass. It's fair to say it's as well patronized, as well populated in terms of headcount as ever. In fact, we had quite significant growth in non-rolling table headcount during the quarter, both over the prior year and sequentially. But clearly, the spend per headcount was lower. And so we do need to drive to secure higher value customers in the premium mass segment to grow the revenues back at Venetian.
Great. Thanks, everyone.
Thank you. The next question is coming from Joe Stauff from Susquehanna. Joe, your line is live.
Thank you, Patrick, Rob, Grant. Two questions on NBFs, please. I guess the first one, is there any way to assess, I guess, the level of consumer adoption, especially for the mass customer for prop bets? Naturally, kind of given the higher guidance that you have on VIP, that the adoption rate is higher, but I was just wondering how you guys think about it.
I think it's very difficult. Are you saying how can you handicap people's willingness to bet a certain way? I'm not sure I understand what you're asking.
No, more like I guess the frequency of a mass customer to bet on props versus that of a VIP. Obviously, different bet sizes, but just the frequency between the two groups.
I don't think you can actually ever say 100% how people are going to bet a certain way, but I do think the lower end customer tends to be, it's like lottery tickets. They tend to bet more. It's a lesser customer, I think, on the prop bets. And your large bettors, you're rolling in super high end, tend to be more flat bettors, but that's not always true. That can reverse as well. And I think the truth is no one can predict this, but what you are seeing over in the market is they are adopting or moving towards these prop bets in a way which I never thought we'd see these. Think about a whole percentage moving an entire point. It wasn't that long ago, 285 was the standard. Where now Patrick mentioned 37. It could be 4-1. The truth is they are adopting these bets every day, both in the base mass, premium mass, and rolling segments. How much we keep moving after, I don't know. I can't predict that. I can tell you we've got the ability now. We're competent with the new machinery and our smart tables to tell you what it should be exactly, and you'll be able to tell for yourself. But I think propensity of bet is very hard to figure out. Some people are dyed-in-the-wool bank bettors or player bettors, and some love prop bets. I don't think you can pigeonhole any one segment how they're going to bet. We have people at the super high end who bet props like crazy, and it's hard to imagine betting that kind of money, and others who are dyed-in-the-wool flat bettors. And that's always been the case in gambling. You can't really assess how someone's going to bet until they step up the table. Although people sometimes do see these bets, how we merchandise them will be very important in the future of our business to merchandise these bets in a way to get people to bet more in different directions. Flat betting doesn't really help our company's whole percentage or the industry. But I think we're in a new world here in Baccarat, and it's an astounding new world. We're lucky to have it because imagine a point and a half more of hold, what that does to this company's revenues and EBITDA. It's astounding. And we're seeing it in Singapore, and I think you'll see it in Macau as well over time. But you can't really handicap or assess. You can merchandise it better so people see it and have the ability to at least gravitate towards it.
Understood.
And you also maybe have more games. And I should also say, we also have people who spend their time thinking about developing these new games and how you do that, how you find new prop bets to make and make the games more interesting and then merchandise it to the customer. So we're actively trying to do that. And it's a very big part of our push towards better hold percentage.
Understood. And maybe a follow-up on just the renovations in Tower 3. What, I guess very briefly, are you still on time to finish roughly in June? And what, just take an inventory of what are the big items still that need to be completed?
So Tower 3 is done. But the key thing is there's some things we're going to be doing in the lobby and the Sky Park over the next 6 to 9 months. But as a lodging capacity, we're there.
The rooms is not the public space, right?
Yeah, the rooms are good. It's the public space that we're going to continue to do some work on throughout the year. But the rooms are there, and you're going to start seeing the benefit of those rooms in the upcoming quarters.
Okay. Thanks, guys.
Thank you.
Thank you. The next question will be from George Choi from Citigroup. George, your line is live.
Thank you very much for taking my question. Now, obviously, the introduction of the new side bets was done in Macau only in the middle of last year. I just wonder how popular are these new side bets in Macau thus far, and how does it compare to Singapore? Is there any chance that you could also raise the theoretical hold rate in Macau in less than 2 years' time?
Hey, George. Actually, in terms of introducing new side wages, we had one set of introduction in Q2 of last year, and the other latest one in October last year. So progressively, you're seeing strong take-up of all of these new wages. Obviously, Macau is somewhat behind Singapore as a market. Some of these wages were introduced a lot earlier before Macau. So we're only beginning to see the adoption, but the adoption, I would say, is strong. But at this stage, yes, in Singapore, we do see a higher propensity to wager these side wages. But Macau is growing, and over time, who knows? As Rob says, you can't predict the precise distribution. All we know is that the propensity is increasing.
I think with time, George, the two markets have become very similar. I believe that long term be very similar in terms of the whole percentage.
Thanks for the color.
You know before we know. You know that before we know. You're ahead of us, George. You know this already, right?
Thanks for that those kind words. Another question for me is on dividends. So you all appreciate the recent dividend resumption at Sands China. Should we expect the payout ratio to be maintained at around 50% level? And I guess more importantly, should we expect an increase in the dividends of LVS as a result from Sands China dividend resumption?
So first off, in the honor of Sheldon G. Adelson, I'd like to say yay dividends. I think that's very important here, very applicable. I think the key thing here is we're very happy that the SCL board determined to be able to start paying a dividend again at the Sands China level. And we hope to be able to grow that dividend over time as our CapEx rolls off there and as we generate more cash flow through revenue and EBITDA growth. So we're very excited about the opportunity to continue return of capital at the SCL level and to grow that dividend into the future. I think at the LVS level, what you've seen us do in years past is really be very dividend heavy. And I think what you're seeing now is you sort of look at our return of capital, which is actually laid out on page 33 of our book. You can kind of see that our ratio from share repurchase to dividends has been very weighted towards share repurchases. And if you sort of review our prior commentary in this call, you'll see that we're very focused on returning capital through share repurchases, both at the LVS level and through the acquisition of further SCL shares. So while we don't necessarily target a specific dividend payout ratio, we do think where we are is healthy and sustainable for the long term for long-term dividend growth. And as SCL continues to grow its dividend over time, as we hope, we'll have the ability to return more capital at the LVS level.
Thank you very much. I'll jump back to the queue.
Thank you. The next question will be from Colin Mansfield from CBRE. Colin, your line is live.
Hey, everybody. Thanks for taking my question. Maybe the first one, can you give a little bit of color around what drove the decision to repay the parent loan from Sands China back to the parent? Just given, we talked about that in the past, and it was a pretty attractive cost of capital relative to where, your current spreads are. So just kind of curious what influenced that decision, and how should we think about, future ability to dividend cash out of Macau? Was that part of the decision too?
I think the idea was that decision was made at the SCL board level, but the general concept was SCL is performing in a strong way and has growth opportunities. Its leverage level is quite low, and and I think for SCL was just negative carry. It was accumulating cash, and why not pay down some prepayable debt since they no longer needed it, as SCL has access to the investment grade credit market if there's any reason to create an opportunity for further borrowings. So I think with access to the revolving credit facility that it had, its current capital structure, its leverage levels, and the amount of cash that it was generating, it just made sense for SCL to pay back and get rid of some negative carry.
Okay, that's helpful, Carlos. Thanks, Patrick. Maybe second one for you, maybe just thinking about capital markets activity coming up, with your upcoming refinancings, both at the holdco level and also Sands China. You guys are a seasoned investment grade issuer. How are you guys thinking about, timing, potentially tapping the capital markets? Would you potentially lean on the revolver since you have capacity and liquidity there too? Just how are you thinking about that?
So I think you'll see us address the $500 million of LVS bonds in 25 in the near term. And I think we have an approach for that we're very comfortable with. In regards to the SEL bonds, the $1.625 billion that comes due, we did actually, through the revolver refinancing there, we also initiated a term loan that we have the ability to draw on that amount. So if we choose to access the high-grade credit markets, we have that opportunity, or we may put it into the term loan, which is also very favorable and offers a lot of flexibility. So we have an approach to both of those maturities in 2025.
Great. Thanks for the color, guys. Thanks for letting me get on. Thanks.
Appreciate it.
Thank you. The next question is coming from Steve Wieczynski from Stifel. Steve, your line is live.
Yeah, hey guys, good afternoon. So, bigger picture question that I'm not even sure you're going to have an answer or not, but I'm going to ask it anyway. Rob, clearly there's a lot of uncertainty around the political environments in both the U.S. and China, and I think the fear that's out there is China might at some point retaliate against U.S. companies or something along the lines, and that's where a lot of investors' heads are these days. So I guess the question is that something, Rob, that kind of keeps you awake at night, or do you view your relationship with China in very, very good standing at this point, and that risk seems more low, if that makes sense?
First of all, I think we are not in mainland China. We're in Macau, SAR. I think there is a difference. Number one, I do think Macau is a different orientation vis-a-vis Beijing. Secondly, to your point, I think we have an incredible relationship with Beijing, and we've worked on it for many, many years, and it's very important to us. We're a big believer in the relationship between China and the U.S. We're very disheartened by what's happening right now. Hopefully, we can get back on track. But it doesn't keep me up at night at all. In fact, I think we're in a very good position in Macau. We've been the leader in CapEx. We've been the leader in developing non-gaming assets. Sheldon has a legacy which stands well. I don't believe this right now, this dislocation in countries is sustainable. There has to be a deal between the two most powerful countries in the world. I remain steadfast. I believe things come back to a much more normal, rational place quickly. They have to. And I'm hoping that happens sooner than I anticipate. But no, it doesn't keep any of us up at night. We feel very committed to Macau and vice versa. It's been a very special relationship with this company, and it began 20 plus years ago when Sheldon first went there and made that pitch for Cotai. And I think the Chinese are incredible partners. The government of Macau, people in Beijing, we're grateful for their support over the years, and we continue to believe we'll be there for many years to come beyond the concession. And no, it doesn't keep me up at night at all. I would like to see a stronger relationship between the U.S. and China tonight because we all need it. Consumers need it. They need it. We need it. It's good for the world. And I'm very disheartened by what I'm seeing, but hopefully that gets resolved quickly. But no, we're not concerned at all about our position in Macau, nor should we be.
Okay, that's great color. Appreciate that, Rob. And then second question, real quickly. There have been some reports out there that the Singapore government wants to get, probably a little bit more aggressive with driving visitation, into their country moving forward. And obviously that should benefit NBS, over time. So I guess the question is, have you guys thought about that more in terms of what, obviously increased visitation could do to, you've always kind of given some longer term projections of what NBS could look like from an EBITDA perspective over time. And has this kind of changed your view around that at all?
So first off, I think Singapore is an unbelievable market for high-value tourism. And Singapore has been very focused on creating opportunities for high-value tourism for many years and investing behind that thesis in airports, infrastructure, and other things that create attractions to help create prominence and desirability to visit Singapore. And so I think for us, it benefits us, but we're also investing with this thesis. So if you look at how we invest, the amenities that we're creating, the way we're positioning ourselves, the way other non-gaming operators are positioning their tourism offerings, it's really a special place. I think for us, it's very motivating, and we're very excited to continue to invest there and expand our offerings there. It's a very rare place. Singapore is rarefied air, and it's very special who goes to Singapore, the consumption habits. If you look at the retail consumption, food and beverage consumption, the gaming play, the lodging consumption, it's really unique. And I think it's driven because of the overall goal of the government of Singapore, which is to create the opportunity for high-value tourism. And so we've been benefiting from it for the last 15 years. And the Singapore government has been great in terms of investing in the assets to drive tourism, and we've been investing behind that.
I have to say, though, as much as Singapore is a wonderful place, our asset is a wonderful asset within that place. And we've created our own very special place within the great state of Singapore. I think what we've done there is extraordinary, and it attracts those people because there's nothing like it in the region. There's nothing that special. It's very seductive. The rooms, the product we've created is amazing, and it's enhanced Singapore and vice versa. So going back, the vision of the Singapore government is amazing. Our vision is pretty good too, to build what we built over there.
Okay, thanks, guys. Really appreciate it. That's great color.
Thank you.
Thank you. The next question will be from Ben Chaiken from Mizuho. Ben, your line is live.
Hey, good afternoon. Thanks for taking my questions. First, at MBS, great margin results and strong mass performance. Would you just remind us, would you say that 1Q25 had a difficult comparison year over year from I believe there was a large concert in the prior year, as well as the easing of the China visitation policy, which I believe was also in the prior year, or was this a pretty clean comparison year over year? Then one follow-up. Thanks.
Well, first off, I think both quarters were awesome.
That makes
so it's a tough comp, but as a practical matter, this was a totally normal quarter. So I would say that there wasn't anything extraordinary that happened in the quarter. This is pretty indicative of the performance of the business without any sort of anything that's out of the ordinary.
Wasn't Taylor Swift there?
And I think the key thing here is we really have been able to put the entire asset to work, which is something we haven't been able to do for a while because of all the construction activity. So we're really getting close to being able to see this thing really get to the point where it's not experiencing any interruption due to development work. And I think the key thing is this quarter was very normal. To your point, last year's quarter did have the Taylor Swift concert, did have a lot of other things going on that created very strong demand and very strong visitation. This quarter didn't. And so we were very fortunate that we had the results that we did. Credit to the team. They did phenomenal work. As Rob just referenced, the building's in phenomenal shape. We think it's the best building in the world, and we're very proud of what we've accomplished. But you can see the results from the activities there.
That's very helpful. And yeah, great result there. And then switching to Macau, maybe just touching on the sequential market share in Macau again, fully recognizing that you had rooms out of service in 1Q, but also acknowledging you had rooms out of service in 4Q as well. I guess is the interpretation just from some of the previous commentary that it's harder for you to leverage the current type of gameplay or player in Macau as it stands?
I think sequentially our room count moved up marginally. So we're about 8,900 for Q4 and 91 or 9,200 in Q1. I think in terms of the Londoner Grand ramp up, that was really a very soft ramp for Q1 because we didn't have all of the rooms. And therefore, it didn't make sense for us to operate as many gaming units in the Londoner Grand Casino for the first quarter. But from now on, from April, you'll see obviously us in full ramp-up mode. So I'm not sure if that answers your question, but is there something else that you're asking that we haven't addressed?
No, that's fine. I appreciate it. Thanks.
Thanks, Ben.
Thank you. And the final question today will be coming from David Katz from Jefferies. David, your line is live.
Thank you very much. Appreciate you working me in. I just want to go back to some of the earlier commentary and questions because I heard the word, competition and competitive market in Macau quite a bit. Having been there not all that long ago and heard a lot of the on-the-ground commentary about more of a benign promotional environment, are you suggesting, that, we might start to see that change as part of the Londoner ramp-up? When you use the word competition, what do you mean by that?
I mean competition. People are fighting for the various segments, and it's across the board. I'm not sure what you mean benign by that, David, because I don't see it as benign. There was a time when face mask was benign, and it fell in the door, and no one gave anything. Those days are gone. So I think it is highly competitive. Again, our asset base is the best in class and scale and size. So I think we'll do better, but I think it'd be foolish to think that in a non-growing market with the top line Francis Stein, not expected would be competitive. And that reflects in everyone's business, not just ours. So I'm not saying it's outsized or silly competition, but it's competition, Grant.
Yeah, I don't have to add to that, Rob's comment. I think it's always been very, very competitive. I think we've just got to look at the competitive context, use the new assets that we have, and the advantages of scale and the product that we have to really compete harder to get more revenue and customer growth. That's all we're saying. I think the market has been very competitive. I don't think there's been any significant deterioration in that, but we've also got to reflect and see where our position is within that context. And with all of the new rooms online, we fully intend to compete hard to get more revenue.
Well, there's reduced liquidity, obviously, from 2019, reduced top line results. So in any market where you shrink by $6, $8, $10 billion, you're going to see more competition if the existing dollars are there, and you're seeing that in Macau. I'm not saying we can't compete. I think we will compete well, but I think it'd be foolish not to recognize that base mass, premium mass, rolling, every segment in Macau is under pressure in terms of getting your fair share.
Right. And if I can just follow that up, one of the observations is, and I think some of the early questions were to this end, is, that the premium mass arena seems to be, getting quite a bit more crowded. Part of my question was, are you, planning to get more promotional? And I think that's what the word benign is really attached to, whether operators start, becoming more promotional in how they compete.
I'm not sure. I think in terms of promotional, you have to look at it in different ways. I mean, firstly, we're going to aggressively deploy our new assets. I think that's first and foremost. We have the largest scale in terms of the table product and slot and G product, and we need to drive that as hard as we can to maximize that scale advantage across all product types and across all price points. That's the second piece. In terms of marketing activities, there's always going to be tactical promotions that you implement. Every operator does. I think we're just going to be very active in engaging existing and new customers and reactivating all customers with the full inventory that we're going to have at our disposal. And we're going to drive that very hard because we intend to gain customers and gain revenues.
Thanks very much.
Thank you.
Thank you. This does conclude today's Q&A session, and it does conclude today's conference call. You may disconnect your phone lines at this time and have a wonderful day. We thank you for your participation.